This is the briefing for Friday, April 21st. Stock indices, as I've been discussing for quite a while, really have not gone anywhere. This is a 60-minute chart of the spiders, 60-minute chart of the Qs, and 60-minute chart of the IWM. And it's pretty easy to see, other than the spiders or the S&P that had an upward trend to it, you can see each of these wicks on all of these 1 hour candles, where you can see wicks on either side, is basically neither buyers nor sellers could gain control of the market. And that really translates. You can look at this on a daily chart, which I'll get to in a minute, and it looks basically similar to the same thing. So, basically, we've really not gone anywhere. Volume is extremely low, and breadth is diverging pretty dramatically. You can see right through here, and this is NYSE breadth, and what's happened to it. Get a little bit of an uptick in today's trading, but really nothing to write home about. Still negative 273 shares. Same thing is happening in the Qs or the NASDAQ, and you can see all of these wicks that basically just a lot of chop. Really a difficult market to trade right now, and you can see market breadth is declining or diverging as well. A little bit of a tick up as well. And the Russell is the same thing, same type of wick, same type of choppy market, breadth diverging as well in the IWM. Looking at it on a daily basis, you can see this rotation now. This rotation longer term is really important. Now, this is the 410 area where we had a pause, unable to really break out at this key reference area, and then we had this rotation back down, retest of the resistance, and then a rotation down. Same thing is happening now. We've got a pause here right at and below 410, a pause right at and just above 410. You can see what's happening with volume in the spiders absolutely collapsing, and breadth in the NYSE absolutely collapsing as well, as we look at what's happening here. Unless or until we see some type of volume coming into this market in one direction or another, I think we're just range bound for right now. Now, there's another Fed meeting. I think it's on May 2nd or May 3rd. So the market may be waiting for that, but this is just a very, very difficult market. You can see even going back for probably 2 weeks of trading, really not a whole lot of movement in either direction, just a lot of chop. In terms of the NASDAQ or the Qs, a little bit different. We're really mostly below this 320 key reference area and looking to break out in one direction or another. Volume on the Qs just absolutely low. Breadth on the NASDAQ just absolutely diverging. Really no strength in either direction for the indices. And finally, the Russell or the IWM, you can see the big difference here is the intermarket divergence is this is the 190 area, which is upside resistance for the Russell, and it is not even close to that, where the other two indices are pretty close to that upper resistance area. And you can see the pause that's happening right around the 178 area in the Russell. Now, a break, and typically the Russell can give us an early warning signal of a move either to the upside or the downside, but you can see that it is basically for the last 2 to 3 days has been trading basically below the 178 area. Breadth in the Russell is absolutely diverging. Volume on the IWM is absolutely collapsing as well. Looking at where we are in terms of overbought and oversold, we're basically neutral. No real help here in giving us an indication of which direction the breakout might be. If we do reach a point of being extremely overbought or oversold, that would give us a pretty good indication of which direction the break may be. And then finally, looking at total volume, you can see total volume on the NYSE is absolutely collapsing. A little bit of a tick up in volume today. And the same thing with the NASDAQ. You can see volume is absolutely collapsing. Another little tick up in today's trading as well. But really nothing going on here in terms of a breakout move or a move that we could determine that we're going to see a breakout in one direction or another. Looking at even a longer term chart, this is a weekly chart of the spiders, and you can see this rotational pattern that we're in. This is right around the 410 to 415 area It's just really just paused. Look, this for 3 weeks, we're really paused right around the 410 area in terms of the spiders. Volume on a weekly basis is really very, very low. And then, of course, breadth on a weekly basis is extremely low as well. Unless or until we see some type of a breakout outside of all of this chop. This is just a very, very difficult market to trade right now. I mean, for several days, we gap up at the open, then close the gap and trade lower. We gap down the next day, then close the gap and trade higher, and it just keeps on going in the same direction. So unless or until we see some type of a breakout and volume confirming it, volume is extremely important if and when we break out of this consolidation. It will give us the gas to determine whether the breakout is a valid breakout or whether it's a false breakout. Have a great weekend. I'll pick this back up on Monday for subscribers.